Hi everyone. So in today's session, we will be learning about annual return and what do you mean by quorum, proxy, and so on. So many new things we are going to learn. So we will see one by one. Every company should have to file annual return within 60 days after meeting is held. So they should have to file with ROC the annual return AR in MGT 7. We are talking about management and administration. So if the meeting is held on, say, 1st September, 1st September, the meeting is held. So from the date of the annual general meeting, the company should have to file this AMGT 7. Suppose the meeting is held on 1/9 is going to be held on 1/9/2026. Then from that you should have to calculate 60 days. So within 60 days, the annual return should be filed with the ROC. So what is this is to be filed only for an annual general meeting. Now every company should have to hold an annual general meeting once a year, right? So it can fix the date of the annual general meeting on even it can hold annual general meeting on 1st July 2026. In that case, whatever is your date of AGM, from that date, you should have to file annual return in form number MGT7 to the ROC. For small and one-person company, the format is given in MGT7A. For this, in the internet, it is available. You can just see what are all the how a company files and what are all the details that we are going to fill in. That also we will be seeing. Assuming a company has not held an AGM, then what is the position? Then also the last date on which it should have held the AGM. We all know that when the balance sheet ends on 31/3/2026, within 6 months, the AGM should have been held from the closure of the year. So, on or before 30th September 2026, the AGM ought to have been held. Or this is the last date for holding the AGM for this financial year 2026. So, in this case, from this, they will take 60 days. So, even if no AGM is held, then also ought to have been held on this date. From that day, 60 days, you have to calculate, the company should have to calculate, and it is a mandatory compliance. AGM, this annual return should have to be filed with the jurisdictional registrar. Depending on the state in which the company is incorporated or registered office is there, then you should have to keep, or the company has to file its annual return. So we will see quickly, and it should be signed. Who should have to sign it? It should be signed if there is a person named company secretary. Then definitely that person should have to sign. If there is no company secretary, this company secretary and one director. If there is no company secretary, then practicing company secretary. He is not in employment. Here, when I say CS, the company is company secretary. What is the meaning? If ABC is there, ABC company would have appointed Mr. D as the company secretary. So he is in employment with ABC company. So here he is in employment with the particular company. Or if it is PQR company, S has been appointed as the company secretary, then S is in employment with PQR company. So that you call it as a company secretary of the company. Now, a person is not in employment who is only in practice. He is not, there is no employer-employee relationship with any company. So, in that case, he is called as the practicing company secretary or CS in practice. He can certify if there is no CS, so there is no company appointed employed person, then a person who is in practice, CS in practice, can certify it using his digital signature. So it is filed digitally, so it is using, the director should also affix his digital signature in the form, and it will be certified by the company secretary in practice. So here we will see what are all the requirements. So should be filed with the ROC within 60 days from the date of the AGM. If AGM is not held, within 60 days from the date on which AGM should have been held, along with reasons for not holding the AGM. That is more important. So why the AGM was not held, that should also be specified. Sometimes, if they are not able to hold the AGM, they can grant extension or they can seek extension for holding the AGM. On specified cases, they will get the permission from the ROC. That is also possible. But why they are not holding the AGM? Suppose if they have sought for an extension for holding AGM from the ROC, then they should have to specify that reason that they have sought. The shareholders are not available. What is the reason, exact reason why they have sought extension? That should have to be specified there. And it should be in form MGT 7 for every company other than small and PC, which should be in form MGT 7A. And it should be signed for the companies by two persons, one director and CS. And if there is no company secretary in employment, a practicing company secretary can sign it. For one person company, CS can sign it, or it can be, if there is no company secretary in employment, then the director of the company can sign the annual return. Then, in case if the company is a listed company, say if it is a listed company, or if the paid up share capital is 10 crores or more, or a turnover, that is sales turnover. Turnover we call it as the revenue earned is 50 crores or more, then it should also be certified by the, that is, it should have to, you should have to get a certificate from the company secretary in practice. A certificate from company secretary in practice. Earlier we had this a compliance certificate. So in annual return that has been taken care of, complaints have been taken care of, wherein they get the certificate from the CS in practice. A certificate from a CS in practice that it discloses the facts correctly, adequately, and the company has complied with all the provisions of the Companies Act. So in that case, the form is MGT 8. That is for listed companies or company having a share capital of 10 crores or more, or if the turnover is 50 crores or more. It is or. See, the act is saying that it is or. So any one of the conditions is satisfied, then you should have to file this. Out of this, any one condition is satisfied, then the company has to file it in MGT 8 after getting the certificate from CS in practice. Practicing company secretary will issue the certificate that the company has complied with all the requirements of the Companies Act 2013, and that should be given as an attachment. And also you should have to place that in the company's website. Each company will have the company's website, and the web link should be disclosed in the board's report. That should also be disclosed, where they can get access to this company's annual return. Because the CS has given the certificate, the shareholder may like to see that certificate. So if you give him the web link, he will go there and he can see the certificate. That is the concept there. Now we are talking about annual return. What are all the contents of the annual return? So first, the SIN number. Automatically, if you type the SIN number, it will come correctly. That is in the portal. Once you type the SIN number should have to be typed in that form. Then if you pre-fill it, then automatically all the existing details will come. So you have to check the registered office of the company, that will be automatically filled in, and the other details you need to incorporate. You need to type it in the form and you should have ensure that it is correct. What are all the details? Now, what is my business activity? Whether it is a service oriented nature or manufacturing nature, am I a manufacturer of automobiles or whatever be my business activity, that should have to be specified. If my company has a holding and subsidiary company, see, holding company, it is more than 51% of the management control or capital is held, you put as a holding company. Then subsidiary company, the other company is the subsidiary company. Associate company, or is it an associate company where less than 50% it holds share, but it is not equal to 50 or more, 51%, but lesser percentage. Then it is called as an associate or a group companies. Those details should have to be filled. Then what are all your in the balance sheet, you would have filled in share capital, you will have preferred share capital, and the debentures, the classification. Say if it is 9% debentures, 12% debentures, whatever is the category, or 9% preference share capital, whatever is the category, that you need to fill in. What are all the different classification of that, whether it is what is your share capital, what is your preference share capital, what are your debentures, and what is the shareholding pattern of shareholding. Also, how much percentage are they holding, promoters are holding, outsiders are holding, all those things. Any changes that has taken place now. Now, any transfers or transmissions or from the previous year, or the promoters would have increased their stake, or they could have reduced their stake, or decreased their stake, reduced. So both are changes. So any changes from the last year, previous financial year. So when you are filing it for 2026, you have to compare it with 2025. You would have mentioned something. So now you are mentioning something. So is there any change between these two, 2025 and 26? That you should have to specify. Now, this is with regards to shareholding. Whether any changes in the directors, when I say directors changes, it could be appointment, it could be a resignation of a director, or it could be from a director, he could be a managing director or a whole time director. The designation also could have changed. So in that case, that is also a change that should also be disclosed, from with effect from which date yes, this designation is changed. That also you should have to mention it. Or a person has been appointed fresh as a managing director of the company, then you should, or new directors are appointed. So in that case, you should have to mention new appointment, or this year this director has been appointed, of new appointment. So that should also be mentioned. Suppose existing is 3 directors. Now that has been increased to 5 directors. That is also a change. So any change which has taken place either by way of appointment, resignation, or change in designation, or there is a cessation of a director or cease to be a director, then in that case you should mention all those details. What are not only for the promoters, directors, key managerial personnel, so everything you should have to disclose it in the annual return. Then, what are the board meetings held with attendance details? Who have attended? Who is the chairman of that meeting? Who is presiding that? And what are all the days on which it was held? Even that should have to be disclosed there in that annual return. You should have to mention it there. So the details of all the board meetings or committee meetings with the date and attendance. Who are the persons who attended, who did not attend? Everything should have to be specified there. And what are all remuneration of the directors and key managerial personnel? How much remuneration do you pay? So when you pay remuneration, how much salary they are getting or how much compensation they are getting, whatever name you call it, that should have to be specified. And if the directors are involved in any offense or any penalty or punishment is imposed. Penalty we call it as whether fine or an imprisonment. So any issues there, that also needs to be specified. And the compounding of offences wherein compounding application was made and appeal was done, so that should also be specified. Then whatever we have got the certification of compliances, disclosures. When I say disclosure, the directors will also disclose their interest in another company. So if ABC is the director in this company, suppose A has got a partnership firm in which he is a partner, so that should be disclosed. So that is an he should be considered as taken. Suppose he is doing in A enterprise or A firm, or you take it as some A firm. Then ABC Limited, if it enters into a transaction with A firm, that should be disclosed. That comes as a related party transaction. So any transaction with the related party, that should also be disclosed. Generally, we give it. So those details we at the start of the beginning of the financial year itself, the director should have to disclose their interest. So they are deemed to be taken as interested or concerned in those firms, or it could be a sole proprietorship, or he could be a director in some other thing. So whatever is that, that disclosure, we get it from a non-executive director also. So that whatever is the disclosure, so that it is safer on for the company. So whenever they enter into a transaction, that is deemed to be a related party transaction. So we get the details at the beginning of the year. In practical sense, every company gets it at the beginning of the year, and the first board meeting that will be placed before the board, and they will take note of the disclosure by each director. Every director will give the disclosure, even if he is not to be considered as concerned or interested, nil disclosure. So we will get it in writing and we will place it before the board. That is done. Then what is the shares held by the foreign institutional investors on in respect of shares held by or on behalf of the foreign institutional investors, that is also disclosed in the annual return. Shall we proceed further? So just give a quick run through of this. Registered office, activities, holding subsidiary company details. So this is with regards to the company details. So this is with regards to the company. This is share capital or thing and changes. Then this is changes in shareholdings or the debenture holders or members. So this is changes in promoters, directors. What are all the meetings held, remuneration, and what are the penalty or punishment, then compliance and disclosure. Then here it will be foreign institutional investors, FIIs, we call it as. So those details you should have to elaborate it. What are all the contents of the annual return? Then, if there is any contravention or if he has not complied with the annual return for a company secretary, the penalty is 2 lakhs. For the others, here the nature of contravention is he certifies otherwise than in accordance. He certifies, but he has wrongly certified or he has done a mistake. For that, the penalty is 2 lakhs. Company has failed to file the annual return. By mistake, it has omitted to file the annual return within the due date, or then it will be a flat penalty of 10,000 for company and every officer in default. Only difference is that for a continuing default, it is 100 per day for both the persons. Then for company, maximum is 2 lakhs, and for officer and default, it is maximum is 50,000. So here alone the change comes. Otherwise, it is they have to pay a fixed penalty of 10,000 plus continuing failure. They have to pay the penalty. For the company secretary, he is a professional, so the flat penalty of 2 lakhs he should have to pay for if he certifies otherwise. Then, shall we proceed further? Okay. We will see the inspection of registers and other details. Now, this could be inspected by the registers and index. It can be inspected. So, I was talking about registers the other day, statutory registers. The rule is that minimum 2 hours should be allowed for inspection per day. You don't ask for fees. Generally, the articles will specify, but you don't ask the persons to pay the fees if they are members, venture holders, or other security holders. You don't, with no fee, you allow the inspection. The company will allow the inspection. For others, the articles may specify, but that too, it cannot be more than 50 rupees per inspection. They can collect the fee, but the rule is that they cannot collect more than 50 rupees per inspection to any other person other than this members, debenture holders, or other security holders, or other beneficial holder. It is only 50 rupees is the maximum inspection fee that a company can charge. Suppose the company has made a default, it has not allowed for inspection, then company and every officer in default is liable for 1,000 per day. The maximum is 1 lakh. That is the. So during business hours, see when I say during business hours where the company is open, so that time will be the business hours. So during business hours of the company, it should be allowed for inspection. So register and index maintained and copies of returns shall be opened for inspection during business hours, not less than 2 hours per day, not less than mean maximum you can even allow for 3 hours, 4 hours. That is there. The rule says minimum is 2 hours per day. You should have to allow. Without payment of fees to members, debenture holders, other security holders, with payment of fees, with payment to others, to any other person, as specified in AOA, not exceeding 50 per inspection, and penalty for refusing the inspection or making any extract. Extract means they can just make a note of it. That you call it as an extract. Make a note, and they will note down all the points in their paper. That is, you call it as an extract, or copy that from that the exact thing, whatever they want from the register, that they can get it. So for that, the penalty is 1,000 per day and maximum is 1 lakh. Then preservation of registers. So you have to keep the registers in safe custody. So it will be kept in the custody of the company secretary of the company or any other person authorized by the board. So he is the person who has to keep it in safe custody. So either the company secretary of the company who is employed, or the authorization could be done by the board. So any person authorized for this purpose. If it is a register of members, you have to preserve that register permanently, right? You have to preserve the register permanently. And if it is a register of debenture holders or security holders, it is 8 years from the date of redemption. See, you cannot issue an irredeemable debentures or that when the redemption date. Redemption means you have paid the amount to the debenture holders, or I will say it as repaid the amount, the due amount back to them. You have borrowed it from them, you have paid it back to them. So from that date of redemption, 8 years, the date of redemption that you should have to. Then annual returns or other documents, AOC4 or whatever for the special resolution or for appointment of a managing director or an appointment of a company secretary, key managerial personnel, any ROC document that should be preserved for 8 years from the date of filing with the ROC. That we call it as an event date, or you file it with the ROC. So after the date of filing it with the ROC, you have to preserve it for 8 years. If it is a foreign register, we discussed in the last session, it should be preserved permanently unless it is discontinued and you transfer that entries to the Indian register. In the principal register will be maintained in the registered office of the company. So there you will transfer that entries. So it has to be maintained permanently. Whatever you maintain it in India, you have to maintain it permanently. So this is the rule for preservation of registers. Then we'll go to the next interesting. Up to this, is this clear? Shall we proceed further? So we shall proceed further. Yes, clear. Why inspection is needed? Yes, the shareholders may like to take extract because that is not available in the portal. See, if it is a form, they can take the they can pay, they can inspect documents in the MCA portal itself. You can inspect, I can inspect, any person can go and inspect the what are all the documents that are filed in the portal. Say any forms filed, MGT7 or MGT7A, AOC4, or whatever preferential allotment of shares, whatever they have filed, that is available in the portal. But for that register, it is maintained only in the registered office of the company, right? They should have to, we learned it, it should be maintained generally in the registered office of the company. Where the company wants to keep it at a place other than that, then they should have to get the consent of the shareholders, right? In the last class we learned. So this is not a public document. So only a company, a person goes there, only then he will be able to get it. So inspection is allowed because it is not transparent. It is not available. Can you see a statutory register in the ROC? It is not filed with the ROC, Registrar of Companies. It is the document of the company. They are maintaining it legally. They should have to maintain it. They are maintaining it. So the inspection is allowed to any person. Will the listed company, this MGT8 will be there. Yes, definitely listed company should have to file MGT8. That is also, no, that if practicing, yes, listed company should have to file MGT8 after getting the certificate from the practicing company secretary. So they will get it from the, yes, any person can inspect the register. That's why it is specified any person can inspect the register. Not only the inspection should be allowed on without payment of fees to members, debenture holders, other security holders. For others, even any third person. So that's why it has been specified in the articles. They will get for the articles will generally provide, but the law says that you cannot charge more than 50 rupees for inspection. That is the rule. The act is specifying, keeping a limit on the charge. Otherwise, if this is not specified, the company will charge 500 rupees, 5,000 rupees, right, for inspection, so that the people will not come and do the inspection because of the charge. So the Companies Act is very clear. The maximum cap is 50 per inspection, not exceeding 50 per inspection. Even if your articles specify more, the maximum amount to be collected is only 50 rupees per inspection. So as specified in AOA, not exceeding, or the AOA would have specified no charge for inspection for outsiders also. Then the company will not charge any fee for inspection. See, it is not a public document. The register is not a public document. The statutory register, they should have to maintain it, but it is not a public document. So inspection is allowed. So they should have to go to the registered office. Only there they will be maintaining it. Any person should have to visit the registered office and should have the inspection done. That is the concept. Okay. Hope this clarifies your doubt. Right? Shall we proceed further? Yes, we will see. Why is the minimum time limit? No, general thing is that minimum 2 hours. The law has been specified that way. So they have specified only the minimum time limit. Even it could be open from 10 a.m. to 5 p.m. Nobody is going to question. The law says that on any day, minimum 2 hours, you should have to keep it for inspection for him to take an extract. So that is a general rule. The maximum could be anything. Prerequisites means before conducting a meeting, what are all the prerequisites? Pre, post. Pre means before conducting meeting. I am going to to talk about meeting, board meeting, AGM, general meeting, EGM. So before conducting the meeting, what are all the work that the company should have to do before the meeting is conducted? That you call it as a prerequisite. That's why the chapters have been arranged in the way that prerequisites, then the meeting, then post requisite. That is how the syllabus, you will find it in the study material. So prerequisites, before the meeting is conducted, what should be done? That you call it as a prerequisites of a meeting. So when I say a meeting, what are all the meeting types of meeting in a company? See, there could be a board meeting. Board meeting will be attended by board of directors. So whatever they take decisions. So first a notice will be given. Notice for the meeting will be given to all the board of directors. They will make it convenient to attend the meeting. They will previously the notice should have to be given. Then in that meeting decisions will be taken. And after the meeting is over, it will be recorded. It should be documented. That you call it as minutes of the meeting. So you call it as minutes. You document it, that you call it as minutes. So minutes means you are recording in a short form what are all the transactions that took place, what resolutions are passed. So that is called as, that is maintained. Every company should have to maintain the minutes that we will be seeing in the subsequent classes. So it is before the meeting, so during the meeting, then after the meeting. So it comes like that. So before the meeting is held, say you are going to hold the AGM, then this is the date of the meeting, or you are going to hold it on 1st September 2026. You have fixed the date, right? The board has fixed the date. Then before that, what should be done? So this is before that what should be done. Then after this, what should be the company should do on the date of the meeting. What are all the items? So during the meeting, this will be done on the date of the meeting where the meeting was held. Either it could be an AGM or EGM. So on that day, what the company should have to do it, that we will be learning in detail. So when I talked about meeting, it could be a board meeting, or if it is a shareholders meeting, it could be an annual general meeting which is held once a year. Next year also they will hold the meeting. So next year, the previous year, say 2026, next meeting will be held on AGM 2027, right? In between these two AGMs, if there is an urgent business which requires the shareholders' approval, then they can conduct an extraordinary general meeting wherein the business will not wait till you pass it in the next AGM. Till you get the consent from the next AGM, the business is very urgent, very important. Then the board can do it, or even the shareholders themselves can requisite an AGM. They can call an EGM, and that you call it as an extraordinary general meeting for immediate transaction or transaction of business. So these are the different types of meeting that are generally held: AGM, EGM. So for both AGM and EGM, you should have to give the notice. The board will decide when the AGM is going to be held. So what they will do generally, suppose they have fixed the date as 1st September, then before in the board meeting in which they have decided the date, in which AGM date has been decided. They will adopt the accounts. How it is done is that they will prepare the management, will prepare the balance sheet, and they will give the auditor will audit the accounts and he will give the certificate, auditor certificate that the company has complied with, and he will give the certificate that will be given after the board meeting. Whatever is the thing, he will give the certificate after that, and based on that, this certificate should also be attached with the notice. So when they send it to the shareholders, they will attach notice, board's report, auditor's report. They will attach the balance sheet, then P&L, cash flow statement if it is applicable, then notes to accounts. Everything will be attached as a booklet. Now you have the facility of sending it in um, online. So previously we used to prepare that and that will be sent to the shareholders. Now before, well in advance, before the AGM is going to be conducted. So the law specifies at least notice should be sent at least 21 clear days before the meeting. So the day on which you post the thing, if you send it by post, it will take effect only after 48 hours after the date of posting. From that day, you should have to count. So generally, it is 21 clear days before the meeting, you should have to send the notice to the shareholders who are entitled to receive the notice. So 21 clear days, what the company do that they will take it as in advance. More days notice is given, nobody is going to question you. But if the notice days or if they have sent the notice say just 15 days before or 10 days before, then question will be raised. So if you have sent the notice 40 days before the meeting, well and good. So the law specifies at least 21 clear days before the date of the AGM. The company should have to send the notice to all the shareholders. Now, a layman will not accept what are all the business that are being conducted. So what are the business that are generally conducted in an AGM? If you see, there are two types of business: ordinary business and special business. So what is an ordinary business? What is a special business? We will see. Ordinary business. There are four types of ordinary business. First one, it is adoption of accounts. We call it as consideration of the balance sheet, auditor's report and board's report thereon. Adoption of accounts, board's report and the auditor's report. That you call it as adoption of accounts. This, when you adopt it, it will be adopted in a properly held board meeting. So 1/9 is the AGM date. 30 days before, suppose they have held a board meeting on 1st August. There should be a board meeting for adopting the accounts. So that will be held on 1 month before or 1.5 months before, whenever they board meet. Then that you call it as that is a valid board meeting date. There will be one particular date. So wherein the resolutions authorizing a person to file the accounts, to fill the forms and file it, that authorization will be given. So whatever they want to do it, an adoption of accounts will be done by a properly held board meeting before the date of the AGM. So what are all the ordinary business that are taken? There are four business. First one, and in the same order only we do it. We don't change the order also. So first one, adoption of accounts. Second one, if the company wants to declare a dividend, then declaration of dividend. That will be the second business that will be considered as an ordinary business. Why ordinary business? That is a routine business. So you call it as an ordinary business. The third one, if a director are going to be reappointed, they retire by rotation and they are eligible for reappointment and you reappoint a director. That will be the third agenda. And fourth agenda is reappointment or appointment of auditors and fixing their remuneration. So these four business are called as ordinary business, meaning they are routine business for which no explanatory statement is necessary. They may have the first agenda or the company is not going to declare dividend, the second agenda will not take place, the fourth or 1, 3, 4 or 1 and 4. It could be anything depending on the company. Or a company can have all four ordinary business to be transacted. Now, if the company wants to transact any other business other than this ordinary business, that you call it as a special business. In an AGM. So in an AGM, any business other than the ordinary business is a special business. It could be an appointment of a director or managing director, or they want to sell a land and building or any asset, or they want to appoint an agent, or they want to do any other transactions, they want to merge, or they any increasing the remuneration of the director. It could be any business wherein shareholders consent is required, so that will be part of a special business. So for this special business, now the board may know what it wants to do. But what about the layman, the shareholder? Will they understand why they are passing this resolution and what is the idea behind transacting this special business? A layman will not know, or the shareholder may not know. So the law specifies there should be attached an explanatory statement if there is going to be a special business. So the board should have to specify why it is doing it. What is the current position? Say if Mr. Yes, a director of the company was paid 1 lakh, they are going to increase that salary to 1.5 lakhs or 2 lakhs per month. They are going to increase it. So the board should have to explain it. So Mr. Yes is a director of the company. Now he is drawing 1 lakh per month. The board have decided to increase his salary to 2 lakhs per month. Any transaction other than the ordinary business requires the shareholders' consent. So your approval is sought for the increase in remuneration from 1 lakh to 2 lakh for Mr. Yes. So that explanatory statement, you have to specify that in that explanatory statement so that the shareholder will understand what is the nature, why they are passing this resolution. So he can understand it and then he can either vote in favor of or against the resolution. If he likes it, he consents it, he will vote for the resolution, or else he will give his vote against the resolution. It is his choice. But it is the duty of the board to specify. Suppose if there is only one special business, the number 1, 2, 3, 4, fifth business will be the special business. Suppose it should be numerically numbered. Suppose the ordinary business is only 2, 1 and 2, or here it will be ordered the adoption of accounts, reappointment of auditors. Only those two agenda are there. Then your special business agenda will start from number 3. It is consecutive. So that way you can put it. So you should have to give the explanatory statement for each business, separate explanatory statement. Your agenda is first, special business is appointment of managing director. Then second, you want to increase the remuneration. So, or you have given this agenda first and then next agenda. For each agenda, this you call it as an agenda. To consider and if thought fit to pass with or without modification the following resolution, an ordinary resolution or a special resolution. Certain resolutions require special resolution, 3/4 should have to consent for it. Certain things a simple majority is sufficient. If a simple majority is sufficient, you call it as an ordinary resolution. The votes cast in favor should be 3 times more against the votes cast against the resolution, then it is a special resolution that we will be dealing in detail in the subsequent class. So first, before the meeting, the company should have to give a notice and the explanatory statement should have to be attached with the notice if there is any special business to be transacted. Then what about EGM, extraordinary general meeting? Every business transacted is a special business, meaning the company should have to attach an explanatory statement along with the EGM. Even if it is one agenda or 2 or 3, whatever it is, it should have to attach an explanatory statement along with the notice of the EGM, extraordinary general meeting. For AGM, explanatory statement is not necessary if there is no special business. They need not attach an explanatory statement. If a special business is there, then the company should also have to attach the explanatory statement. When it should be sent, it should be attached along with the notice, and when you are sending it to the shareholder, you should also send the explanatory statement. Is this clear? We will be okay. I'll make a note of all your doubts. I will take it in the appropriate situation. When it comes, I will take it. What exemptions you mean, Harshal? Okay, clear. For a private company. Okay, I'm going as per the study material. In the subsequent thing, you will get it for exemptions for that. We will be seeing that in the forthcoming slides, right? So, notice of a meeting. Who can call a general meeting? So, we will be seeing, I have given you the outline of that, and we will be seeing the rules one by one. So, AGM, notice to AGM or notice to EGM can be done by the board of directors. The board passes a board resolution. So they will hold the board meeting and they will pass a resolution stating that, say on 1st August, there is a board meeting. So they will say, resolve that an annual general meeting will be held on 1st September 2026. They should have to specify where they are going to hold it, the day, the time, the place where it's going to be held, and what day. Day means it is whether on Thursday or Friday. That is the day, time. See, the shareholders should have to know the date, no? So whenever you invite a person, you will specify all these things, no? So likewise for a company, they should have to specify the date, the day on, if it is, say it is Sunday, say if it is a Friday, on Friday, 1st September, or whatever the day comes, that day also they should have to mention at 10 a.m. at ABC place. So wherever they are going to hold the AGM, that place should also be specified. An individual director cannot call a general meeting. Only a board can call the general meeting. So individual director does not have the authority to call a general meeting. Then similarly, you cannot issue a notice without the sanction of the board. Why? In that notice, you will find that if you go through the notice, they would have specified by or on behalf of the board. On behalf of the board. Or in many cases, by order of the board. Then it will be signed by a director. So they would have mentioned by order of the board, by or on behalf of the board. One person will issue the notice. So it is always done by the board generally. So if it is done without the sanction of the board, it is invalid. However, there is an option. When do you use this? However, this is an exception. Though it is done, it can be ratified. Ratified means later on they accept. Ratification means the board can ratify the acts of the director, or without, they don't have the authority, but they have used that authority. Then if they say, okay, then that is called as accepting. That accepting is called as ratification by the board. The board should have to consent for the thing. So that is a ratification. Then, who are all the persons entitled to that notice? It is not only members. So if it is a legal representative of the shareholder, of the deceased member, so a member, he is no more. So then you call it as the legal representative of the deceased member, or official receiver or assignee of the insolvent member. They are also eligible to get the notice. Then auditor or auditors, say internal auditor, external auditor, the person who has given the certificate, then every director of the company. So you should have to give the notice to every director, be it a whole-time director or a nominee director or a executive director, non-executive director, by whatever name you call them as, you should have to give the notice to all the persons. So the first three part comes with members aspect, and the fourth and fifth is the not a non-member. They need not be a member, but still they are entitled to receive that notice of general meeting. You should have to give it, because the director has prepared the board's report. So he is involved. Auditor has given the certificate. So you invite them to the meeting. Then time limit for sending the notice. It should be sent at least 21 days clear notice. That should be given for any company. For a Section 8 company, 14 days notice is essential. For every company, 21 days. Then for Section 8 company, that is a charitable organization, it is 14 days notice is enough. So clear notice means the date on which the notice is served and the date of the meeting are excluded. After that, it should be 21 days. Then the articles of association cannot say it is enough if the company gives a 14 days notice or 18 days notice. It cannot curtail the requirement of 21 clear days. That is invalid. So the articles cannot curtail. The minimum requirement should have to be observed by any company. Then if it is sent by post, you will count after the expiration of 48 hours, after the letter containing the same is posted. So this is the meaning for clear thing. Now it is given even through electronic mode. Now they follow, they don't physically send it. So they will attach the web link of the notice and they will send it to the email ID. And they will also post it in their website. That is there. Then what are the contents of notice? Generally, it will start like this. Notice is hereby given that an AGM, annual general meeting of ABC Limited, will be held on 1st September 2026 at, or it will be held on Thursday or whatever is the day. I don't remember the day, so I'm just putting it as Thursday on 1st September 2026 at 10 a.m. at probably whatever is the place, say at ABC Mahal or whatever is the place, then the state, then they will mention to transact the following business. Then they will specify the ordinary business 1, 2, 3, 4, then special business. Then they will specify that if it is there, and the notice will be signed by or on behalf of the board, and it will be signed by a director. And they will also specify the explanatory statement is attached there too, and the register of members will be open for inspection. So all those details they will give it in notes below that notice 1, 2, whatever they want to say. It will be open, members can inspect, all those details which they want to share, that will be specified in the notice itself. So every notice of a meeting must state the place, date, day, and hour of the meeting. So the place, if I say which place they are going to have it, say if it is at Indraprastha Marg or in that place, then the place where it is going to be held, date 1st September 2026, day, Thursday, Friday or Saturday, whatever is the day that you should have to do it. What is the time, hour of the meeting? It is either 11 o'clock in the morning or 10:30, 10 a.m. And it should also specify the business to be transacted at the meeting. Ordinary business, special business, all those things they will be specified. Accidental omission of or non-receipt of notice, that will not invalidate the proceeding. A person cannot say Mr. X did not receive the notice, who is a shareholder or who is a member of the company did not receive the notice, explain the validity of the proceedings taken at the meeting. They may ask you a question. So, there you should have to say any accidental omission to give notice to or non-receipt by a member does not invalidate the proceedings of the meeting. So, accidental omission or non-receipt of such notice by any member. So, member has not received the notice, but he is entitled to the notice. He is entitled, he is still a member. He is entitled to the notice, but he has not received it. Then it shall not invalidate the proceedings of the meeting. So, all the points you should have to write. Accidental omission or non-receipt by any member who is entitled to receive the notice but has not received the notice. Whatever the transactions has been done by the company, that will not be invalidated merely because a person has not received the notice of the meeting. That is the concept here. This is an exception. Then the question is, can a shorter notice be given? Less than 21 days. Yes. It can be given provided the shareholders consent to it. At least 95% of the shareholders consent to the shorter notice. Suppose if there are only 10 shareholders, it is easier to get the obtain the consent. So here, if all the 10 agree, then it is okay. Suppose I take it as 100 shareholders. 100 shareholders are there. Then 95 shareholders should have to consent for the holding the meeting at lesser than 21 days. Suppose at shorter notice, even next week also. So today you are issuing within 7 days or within 10 days you are going to hold the meeting. Yes, if the shareholders, the concept is that now the meeting is going to be attended by the shareholders. If the shareholders consent to it, the act will not come into the picture. That is the concept. They have agreed or a unanimous consent has been obtained. Unanimous means all the shareholder have given their consent. That you call it as unanimous consent. Not even a single shareholder has given his consent against the resolution. So all the shareholders have agreed. That you call it as there is not even a single vote against the resolution. You will take a vote that we will be seeing, not even a single vote against the resolution. You pass a resolution, resolved. You agree to it, that you call it as in legal terms, that is a resolution. You agree to it, you resolve. So that is a resolution. So all the shareholders agree, then you call it as a unanimous consent. All. It should be 100% consent. This you call it as 100% consent. Then that is a unanimous consent. Then also the act will not be applicable. So you can pass the resolution, and if the shareholders agree, then you can call it at shorter notice. Or if consent is accorded in writing or by electronic mode is obtained for an AGM, not less than 95% of the members entitled to vote thereat, not less than 95%. So not less than 95% of the members entitled to hold thereat. Any other general meeting. So if it is an EGM or any other thing, if the company has a share capital, not less than 95% of such part of the paid up share capital. If the company has no share capital, then total voting power exercisable at the meeting. They don't have the shares, but instead they have voting rights by the members. So 95% of the voting power. They should have to exercise. Then it is possible for the company to hold the general meeting by giving a shorter notice. They want to have that done, so they can do it if the company wants. Yes. If 96% accepted, yes, they can hold the meeting. They can very well do the meeting. No issue. If 96% they have consented. Minimum is 95%. That is the concept. See, retirement of directors by rotational basis means they have a exit route for the directors. For a public limited company, they have an option. The rule says one third of three fourth of the directors or one third of two thirds of the directors will retire by rotation. The others are non-rotational director. In directors chapter, you will be reading it. So there is a rule that they should retire by rotation. The articles will specify for a public limited company. So they retire by rotation. What the resolution passed is that Mr. G, who retires by rotation and being eligible, offers himself for appointment. H, is a director who retires by rotation and being eligible offers himself for reappointment. So that will be passed in the ordinary business. Suppose he want to leave the company, then this is the exit route. He is eligible, but he has not consented to be reappointed. Even that you will make a mention there. He is not going to be reappointed. So that also you will make a mention. Ratification means it is you don't have an authority. See, you have done something. You have bought say a laptop. Assume, or you have bought a book. You have not got the permission from your parents. Assume you have done something, but they say, okay, here afterwards do it after asking my consent. That is called as ratification. So you have not asked the permission. Without the permission, you have done an act. Then subsequently, you should have to ask the permission before doing an act. The company has or the director has issued the notice. Then the directors want, he has not done something unwantedly. It is for the company only he has done it. But it should be consented, giving consent to the action, so that will be ratified later. So that you call it as a ratification. You don't have the authority, but the directors consent to it. That is the thing. See, deceased member means the member has died. He is no more alive. So that you call it as a deceased member. So when a person is no more alive, then the legal representative will be there. So he is entitled for that notice. Or his successor. Suppose if the person has drafted a will or the shares go to the subsequent sons or the daughters, then that you call it as transmission of shares, or the legal representative. He becomes the legal representative of the deceased person, the succeeding person. If the grandfather has the shares, the grandfather passes away, then it comes to the son. Suppose he has given, the shares will be transmitted, or if no will has been given, it will be transmitted equally in equal parts to the sons and daughters. That will be, that you call it as a deceased person. Insolvent means a person whose assets or he has taken a loan and his assets are not possible. So that you call it as an insolvent person. So for him, an official receiver or assignee will be appointed. So he has some assets, but he has become insolvent. His loan is say 5 crores, but his assets are only 1 crore, assume for argumental sake. So in that case, no more, his assets will not be enough to repay the debt because he has got 5 crores or 50 crores worth of debt, but he is having assets only 1 crore, assume. So definitely he is an insolvent. His assets will not be capable of repaying the debt. Then that person, either he can adjudicate himself to be an insolvent, he can apply and he can get the insolvent, treating him as an insolvent, or he becomes an insolvent. The application is pending. See, intentionally, if a person has omitted, you should have to prove. That is very important. Only then we generally say nobody does it purposely. Intentionally, they don't omit. If 96% then allotted an AGM after such notice, right? Meaning minimum is 95. If there are 100 shareholders, 95 should have to give a consent. If 96 give a consent, very well. 100 persons give the consent, 100 shareholders, all the shareholders give the consent, no problem. The rule specifies at least minimum 95% consent should have to be obtained for giving a shorter notice. Then it could be questioned. See, for 95%, suppose there are 5,000 shareholders. In that, you have to calculate 95%. You have to get the consent from all the shareholders. If there are 50,000 shareholders, 95% will be, you have to calculate it accordingly. Then you have to get the consent. Accidental omission means by mistake, inadvertently, they have omitted it, not purposely. So that is a accidental omission. Yes, transfer is for voluntary transfer. A live person transferring, A is transferring it to B. That you call it as a transfer. Transmission is the word only if the person is no more, then his shares get transmitted. Transmission is by operation of law. The shares are transmitted to another person by operation of law. For transfer, voluntary transfer. I want to sell my shares. I can transfer my shares to other person. Shorter notice, yes, you can give your consent online also. If you are a shareholder, you will get the details. Please give the details whether you consent or not, so that consent will be obtained. So that is a shorter notice. Yes, even though he has not entitled, ma'am, for shareholder who entitled to receive notice but has not received notice, yes, he has got every right to attend the AGM. That is possible. So he has got every right to attend the AGM. So let me come to a particular point and then we will go to, after the break, we will take explanatory statement. Up to this, hope your doubts are clarified, right? So we will take a 10 minutes break and then we will meet. Yes. So we will meet after 10 minutes. A short break we will take and then we will meet. See, the onus of the company to prove, yes, was not deliberate. It was intentional, it was accidentally omitted, it was not deliberate, not intentional. So that the onus, the proof is with the company. They should have to prove it was accidental omission, it was not deliberate, it was not purposeful, it was not intentional. So that has to be proved. Yes, Sridhar. So we will take a break and then we will meet. Yes. Yes. The screen is visible, right? Okay. I'll continue. So welcome back. We will continue with explanatory statement. So an explanatory statement should have to be given for the special business to be transacted. So the company generally transacts the ordinary business at an annual general meeting. So what is that? First agenda will be consideration. In the same order only it should have to be followed. You cannot change the order. So you will take it as first one is consideration of accounts. So first agenda is this: consideration of financial statements, reports of board of directors, auditors. If the company wants to declare a dividend, then the declaration of any dividend that will be specified. Or the interim dividend already declared will be taken as the final dividend, or the directors want to declare any dividend that will be mentioned here in the second agenda. So the directors are proposing to declare a dividend of 10% on the paid up share capital of the company. So that is an ordinary business that should have to be specified in the second agenda. So here you should have to specify the declaration of dividend. And the third one, appoint a director in place of those retiring. This will be followed in case of public companies where directors should have to retire by rotation clause is there. Retire by rotation. You will be learning it subsequently if you have not done the directors chapter. So retire by rotation, the rule says that the director should have to retire by rotation. That is an exit route. So if in case of public companies, this agenda will also be there. So third or fourth, if two directors retire, then third and fourth will be the agenda. Then the next agenda is appointment of and fixing of the auditor's remuneration. For this, since it is an ordinary business, explanatory statement is not required. For special business also an explanatory statement is required. And for EGM, any business you transact, for that also explanatory statement is required. What will the explanatory statement contain? What are the details that you should have to give? Suppose I said Mr. A director in remuneration is going to be increased from 1 lakh to 1.5 lakhs, assume. Whether Mr. A is interested in that resolution, yes, he is interested in the resolution. Why? Because it is for his remuneration, it is increase in remuneration is sought. So he should not participate in that. So none of the directors except Mr. A is interested in the resolution. So that line we will add. None of the directors are interested in the resolution. That you call it as nature of concern or interest in that resolution. That should also be specified in the explanatory statement. So the nature of concern or interest, financial or otherwise, that should be specified by every director, every key managerial personnel or any relative of a director they are interested, then that disclosure should also be given. Relatives of director, manager, and key managerial personnel. So their relatives. So the first two, then their relatives. That is the third point. Then any other information with the members want to understand. So that information also should have to be given. So currently Mr. A is having a remuneration of 1 lakh. Now that remuneration needs to be increased to 1.5 lakhs. So that is the information which you are giving to the shareholders to understand the meaning, scope, and implications of the items of business. So they should have to give their consent. No, how can you give a consent without understanding? So for that, you should have to enable the shareholders to understand. For that, you should have to give the basic information. And for any special business, if The extent of shareholding of the company. If any item of special business relates to or affects any other company, to the extent of shareholding in that other company. Suppose you are going to transact, ABC company wants to transact with PQR company, wherein whether A may be a director or any other person is interested. So what is the shareholding in that company? That also you should have to take it. Suppose if it is more than 2%, you hold shares in this company, then you are a shareholder in some other company, that nature of interest should also be disclosed. So the extent of shareholding affects any other company. So here they are transacting business between ABC. Now they are going to sell the assets to PQR company. In that PQR company, a person holds say 5% of the shares. Then that disclosure should have to be made. Because it exceeds the extent of shareholding is 2% or more of the paid up share capital of that other company. Then that should also be disclosed. Then any item of business refers to any document. Then that document should be kept for inspection. Say if they are going to sell an asset, then that asset document, or if it is subject to charge, they are selling that asset, then that charge document, whatever is the document involved in that transaction or that agenda, that should also be kept open for inspection by the shareholders. Then if you don't disclose or effect of non-disclosure, all these disclosures you should have to make, but it is not sufficient. Non-disclosure or insufficient disclosure. So for that, and any benefit accrues to any promoter, then he should have to compensate the company to the extent of benefit received by him. Whatever is his profit, whatever is his gain, benefit, it could be monetary benefit or it could be any gain, whatever he is benefited, that he should have to compensate the company for the benefit arrived at. Then every promoter, penalty for contravention of the provisions. So in that case, every promoter, director or manager or other key managerial personnel of the company is liable to a penalty of 50,000 or 5 times the benefit accruing to him, whichever is earlier, whichever is higher. So 50,000 or 5 times benefit, whichever is higher, should have to be the penalty for the contravention. The person should have to pay. The promoter, director, manager or key managerial personnel should have to pay for the non-disclosure. Shall we proceed further with it? Up to this, is it clear? Not visible. Oh, I am not visible. Okay. Okay. We'll go to the next concept, quorum for a meeting. For any meeting, quorum should be there. That is, members who should be personally present. Required for a meeting. Members to be personally present. That is a requirement. The minimum number of members. Minimum number of members who should be present in a meeting. That you call it as a quorum. Right? So for a private limited company, the restriction is very less. For private company, even if 2 members personally present, that forms a quorum. But for a public limited company, where there are more than 1,000 shareholders. If it is not more than 1,000 shareholders, then 5 members should be there. More than 1,000, but less than up to 5,000. So less than or equal to 5,000. Then it is 15 members personally present. Exceeding 5,000, then 30 members should be present. Suppose I ask the question, if there are 1,500 members, then 15 members should be personally present. If there are 6,000 members, if there are 10,000 members, then 30 members should be personally present. If there are 750 members, then 5 persons should be personally present. For a private limited company, 2 persons personally present forms the quorum. Suppose your articles has specified a greater number, then articles will be ruling. So the articles are specified 100 members personally present should be the quorum. Then you should have to stick on to the articles of association because that is the internal charter. So minimum number of members who must be personally present in order to constitute a valid meeting, unless the articles provide for a larger number. The quorum of meeting shall be for a private limited company 2 members. In case of a public company, not more than 1,000 members. 5 members will be the quorum. More than 1,000, but up to or less than or equal to 5,000, it is 15 members. Greater than 5,000, or you can even write up to. Exceed 5,000, it is 30 members personally present should be the quorum for the meeting. Suppose the quorum is not there, what has to be done? It will be adjourned. Adjourned means the meeting will not be held on that day. It will be adjourned to the same day next week. Suppose if it is Thursday, next week Thursday it will be held. And even in that adjourned meeting, the quorum is not held, is not there, then the persons personally present will be the quorum. Because otherwise it will get adjourned indefinitely. So in an adjourned meeting, who are the members personally present, they will form a quorum. Suppose they have not mentioned this is an automatic adjournment, or the board may specify the meeting stands adjourned, it will be held on a particular date. So the board have got the power to determine the date of the AGM, date of the adjourned meeting. For that, you should have to, if it is the same thing, you need not give it. If it is determined by the board, then you have to give a notice for that. You are keeping on some other day, no? So for that, the shareholders will not know. So for that, you should have to give a notice. What is that? 3 days notice should have to be given for the adjourned meeting. That should be given. In cases individually, or you can even publish it in the newspaper, two newspaper, English newspaper and vernacular newspaper. In case of EGM, if it is called by the requisitionist themselves, because EGM could be called by the board or by the members, members holding shares, that you call it as a requisitionist. So they themselves have called the meeting. So when quorum is not there, it will be cancelled because they only have called the meeting. So quorum is not there, then the meeting stands cancelled. So what is the time within which quorum should be there? Will you wait for 1 hour, 2 hour? No, the law says within half an hour the quorum is not there. Then the chairman will ascertain whether the quorum is there. If the quorum is there, he will start, after ascertaining the quorum, he will start with the proceedings. He will start with the agenda. 1, 2, 3, 4, like that, he will pass the resolution. If the quorum is not there, the chairman will see to it that the quorum is not there, and he will wait. It is left to his option. He can wait, say, for 35 minutes or within half an hour is the general rule. He can, with the consent of the members, he can wait for another 5 minutes, and then instead of, because it is a lengthy process for holding a meeting another day, so they will wait if the quorum is not there, and they will adjourn it. Adjournment is only if it is not there, quorum is not there. So EGM called by requisitionist, if the quorum is not there, it stand cancelled. In any other case, it is adjourned to the same day, time and place in the next week. Or the board may determine, so in which case you should have to give a 3 days notice, because you are giving some other day, the shareholder should be informed, the member should be informed. So you have to give 3 days notice, or you can publish it, an advertisement in the newspaper, because individual notice could not be given. Then you publish an advertisement in the newspaper. That is also possible. Then if at the adjourned meeting also the quorum is not there, then the members present shall be the quorum. Then the chairman of the meeting, election of chairman. So a meeting is there, so they can elect the persons present among themselves to be a chairman. So whoever members present can be the chairman by show of hands. Show of hands means you are just, we ask, no, who are consenting, you please raise your hands. So that is a show of hands. In the meeting also, they will ask them to raise their hands, and using that hand, that they will count it and they will do it. Then suppose articles otherwise provide. So election of chairman by members personally present shall elect a chairman among themselves on a show of hands, unless the articles specifically provide that a poll should be conducted and only through poll he should be elected. Suppose a poll is demanded for the election of chairman, the chairman elected by show of hands can be continued till the result of the poll is declared. Then for the rest of the meeting, some other person can be the chairman of the meeting. Then what are all the powers of the chairman? He manages the meeting. He ensures that the quorum is there, and the passing of resolutions are done in a peaceful way. There is no disturbance from the members. And after the meeting is concluded, he signs the minutes. Because he was acting as the chairman, he is the person who knows what are the transactions that were done. So when it is recorded, he will sign the minutes of the AGM. As the chairman of the meeting, he has got the right to sign the minutes of the thing. And he should act in an impartial way. He has got a prima facie authority. Prima facie means major, he is the main person. So he has got the utmost authority. And in case of transactions, if there are equal votes, that is in for the resolution and against the resolution, 50% here also 50%, here also 50%, then he can exercise his vote. That is called as casting vote. Either he can put his vote in favor of the resolution or against the resolution. So generally he will favor the resolution, so, and he can cast his vote on a particular business. So he has got a right to cast a vote. That is possible. And he can treat it as the resolution as passed. That power he has got a, if provided in the articles. If so provided in the articles. So if so provided in the articles, he can, in case of equality of vote, he has a right to cast a second vote also, and he can treat it as concluded. Shall we proceed further? Yes. Proxy. So what is a proxy? It denotes both the paper which should have to be deposited with the company, and a member could not attend the meeting personally. A is a member of the company ABC Limited. A could not attend the meeting personally. Then, instead of Mr. A, he can appoint Mr. B to attend the meeting. Then, Mr. B is the proxy of A. Then, Mr. B is the proxy of Mr. A, who is a member. So, meaning if the member is not able to attend the meeting personally, then he can appoint some other person to attend on his behalf. For that, what you should have to do, he should have to deposit, he should have to intimate, no? See, the company will not know his intention. So he should have to give the notice to ABC Limited Company. This proxy form should be deposited before 48 hours of the meeting. So Mr. B is the proxy. What are his rights? What he can do? Who's a proxy? All those details we will see. So this is the proxy. This you call it as proxy form is also, that also you call it as proxy form, and the person is also called as proxy. So instead of one person, the other person attends. Any member entitled to attend and vote at a meeting shall be entitled to appoint another person as a proxy to attend and vote on his behalf. So he is entitled to attend and vote. The member can appoint another person as proxy to attend the meeting and vote on his behalf. See, the proxy has got a right to vote only on poll. When poll is demanded, then the proxy can vote. And the proxy cannot speak at the meeting because he is not a member. He is only a representative of the true member. So another person has been appointed, so he has got no right. The member can speak at a meeting, but a proxy cannot, has got no right to speak at a meeting. Unless articles of association provide otherwise, this is not applicable to a company not having share capital. So if a company does not have a share capital, then proxy is not there unless the articles provide otherwise. But central government has got powers to declare who classes of companies where proxy is not allowed or members not entitled to appoint a proxy. So the central government has got the powers, it can specify. So what is the role of the proxy that we are going to see? What is his role of proxy? He has no right to speak, has no right to speak in the meeting, no right to speak at the meeting. He can attend the meeting, but while calculating the quorum, he is not a member. not a member. He is only a representative of the member. So for quorum purposes, he will not be counted as the quorum. And he can only vote on a poll. He cannot vote on a show of hands. He cannot. He cannot raise his hand and say that yes, he is voting in favor. That is the meaning. And he cannot speak. So he cannot vote on a show of hands also. But he can vote on a poll, his voting will be counted. A proxy can be a member or non-member, meaning Mr. B could be a member. He need not be a member, not a member. You can appoint another person also to vote. So Mr. B, if he is a member, he can vote for his shares. But he cannot vote for Mr. A's shares. That he cannot do it. When he is a member, for his own shares he can do because he is a member for that. There he can do it. He is also acting as a member for his own shares and he is also acting as a proxy for Mr. A's shares. So that is the rule. For other companies, a proxy need not be a member. But for Section 8 companies, proxy also should be a member. Proxy should also be a member. Only member can be appointed as proxies for Section 8 companies, for charitable institutions. A restriction. What are all the restrictions? A person can act as a proxy for more than one member. Anyway, he is not to be counted for the quorum, right? So he can act for more than one member. But not exceeding 50 members and holding in aggregate 10% of the share capital. So it should not exceed. He cannot act as a proxy for 60 members. For 20% of the share capital, he cannot act as a proxy. So that is the thing. Can act as a proxy not exceeding 50 and holding in aggregate not more than 10%. So the restriction is that he can act as a proxy for 50 members, but 52 members, 51 members, a person cannot act as a proxy. And also the limit for the percentage of share capital, not more than 10% of the share capital. So if there are, see here it is, not more than 10% of the share capital. Any person holding more than 10% of the share capital may appoint a single person as a proxy. And such person should not act as a proxy for any other shareholder. Only one proxy. He cannot be a proxy for another 40 persons or another person, even another single person also he cannot be a thing. So if one of the member holding 10%, more than 10% of shares, that proxy cannot act as a proxy of any other member other than except such member. Suppose Mr. A holds 15% of the share capital. He appoints Mr. B as proxy. Then Mr. B can act as a proxy for only A. Mr. A. He cannot act as a proxy for any other member. That is the concept. Why? Because the member is holding more than 10% of shares. So if that member is appointing a proxy, that proxy can act as a proxy only for that particular member who has appointed him and not for any other person. Is this clear? Yes, for section 8, only member is allowed to act as a proxy. The other member can act as a proxy for one member can act as a proxy for another member because that member is not able to attend the meeting. That is the concept. Then, what is the compliance requirement in case of a proxy? Every notice calling a meeting should have to specify. See, I was discussing about the notice of the meeting, right? So that notice of meeting should have to specify that a member, you have to specify because the shareholders will not know about this. See, you are learning law, so now you know the company law and regulation. What about the third person, a layman or a shareholder? He will not know that, no. So you should have to specify in that notice a note stating that a member is entitled to appoint a person as proxy. Entitled to attend and vote is entitled to appoint a proxy. And you should also specify that proxy need not be a member. And proxy need not be a member. You have to give it in notes to that notice. That goes invariably. So if a proxy has to be appointed, you have to give it, the member should have to fill MGT 11 and deposit that proxy with the company 48 hours before the meeting. 48 hours means 2 clear days. That is, if 10, why they have specified 48 hours? If 10 a.m. is the meeting, then 48 hours before that, they should have to deposit the proxy form with the company. That is the meaning. Suppose if 1 p.m. is the meeting, then 48 hours before that. So that's why 48 hours before the meeting, the member should have to deposit the proxy form. So what is the compliance requirement? The compliance means it is a mandatory. Only then you use the word compliance requirement. It is not mandatory, then you're not bothered about it. Compliance means it is a mandatory requirement. Mandatory means compulsory by the act. Compulsory requirement. So every notice calling a meeting of a company shall have a statement that a member entitled to attend and vote is entitled to appoint a proxy or one or more proxies where allowed. Suppose the article should have to specify. You can also appoint one or two as a proxy. That is also possible. But it is where allowed, not generally. So where allowed. If it is allowed, then the member can do so. To attend and vote instead of himself. So he can vote only in case of poll, not in case of show of hands. Only on a poll he can vote. And the proxy need not be a member. That form should be in MGT 11. And that proxy received 48 hours before the meeting will be valid even if the articles provide for a longer period. See, your articles may say at least 5 days before the meeting or 3 days before the meeting. It will specify like that. Or it may say 100 hours before the meeting. It should have to specify. But the act, even if the articles is there, so your act overrides the articles of association here. Act is only relevant. Whatever has been specified in the articles, that is invalid if articles specify a longer time period. Then Act only will provide. Then every officer of the company who is in default shall be liable to a penalty of 5,000 rupees. So this is the compliance requirement for proxy. Then inspection of proxies. Now a member can inspect the proxy. Who are all the persons who have appointed the proxies? How many proxy forms are there? He can inspect the proxy form. So every member entitled to vote can also inspect the proxy form lodged. That is MGT 11 that has been lodged with the company. So for the purpose of inspection, 3 days notice is given to the company. So he wants to inspect, no? So for that, he should have to give a notice to the company. That 3 days notice should be given to the company. So the person who wants to inspect can inspect it during the business hours of the company. So that can be done. So every member entitled to vote at a meeting of company or on any resolution to be moved thereat shall be entitled to inspect the proxies lodged. For the purpose of inspection, a minimum 3 days notice in writing is required to be given to the company by the person who wants to inspect. Inspection by any member can be made during the period beginning 24 hours before the time fixed for the commencement of meeting and ending with the conclusion of the meeting. Meaning, if my meeting is going to be held on 1st September 2026 at 10 a.m., I can do the inspection from 31st August from 10 a.m. to 1st September to 2026 10 a.m. Suppose the meeting runs up to 10 to 11:30 a.m. Then the meeting is concluded at 11:30. So ending with the from 10 a.m. on 31st of August to 11:30 a.m. on 1st of September, that is on the date of the meeting, the person can inspect. For that, he should have to give 3 days notice in writing. He is going to inspect means 3 days notice in writing should have to be provided. Now he is going to do the inspection before 24 hours before the time fixed for the commencement of the meeting. So why I took the word commence, this act specifies commencement of the meeting. The meeting is going to be started at 10 a.m. Then 24 hours before the commencement of the meeting. So 10 a.m. the same time on the previous day. From that time till the conclusion of the meeting, he can inspect. For this, he should have to give a 3 days notice. Suppose he is going to start the inspection 31st August, 3 days before he should have to give the notice to the company that he wants to inspect the proxies and he is going to inspect. Or a person, generally what they do, they will come before. The meeting is going to be started at 10 a.m. The practical instance, they will not come on the previous day and the next day. Practically what they will do, they will come at 9 o'clock or 8 a.m. in the morning and they will start inspecting the proxies at the meeting. So there, whatever is large, they will inspect it and they will do it. So this is how it is being done for inspection of proxies. What are the forms that has been done? Then penalties. Suppose you are knowingly issues, suppose the company officer, he purposely invites the person to act as a proxy for another member, then if he is found out, then he is liable for 1 lakh fine. So inviting proxies at company's expense. So if a person has invited a proxy at the company's expense, then he is liable for a punishable by a fine of up to 1 lakh rupees. Any officer who knowingly issues invitations to appoint a specific person as a proxy at the company's expense is punishable by a fine of up to 1 lakh rupees. Officers are not liable if they only supply a proxy form upon written request by the members. So the members have requested the company to supply the proxy form, that is MGT. It will be in the form MGT 11 that will be printed and that will be supplied to the members. So if they have not given the proxy, then at their request, members request, if an officer supplies the proxy form, then he is not liable, otherwise he is liable. That is the concept. Have you understood up to this? Shall we proceed further with the MCQs? We will see the MCQ. Now, you tell me, if the company's articles require proxy forms to be deposited 60 hours before a meeting, but a member deposits it 48 hours before, what is the situation? The proxy is invalid as per the articles. The proxy is valid because the act overrides the articles. The proxy is valid only if the chairman allows it. The member must pay a penalty of 5,000. So, what will be the correct answer for this? So, many are giving the correct answer. See, what the rule says, if the even if the articles provide for a longer period, proxy received 48 hours before the meeting will be valid even if the articles provide for a longer period. So this is only tested there. So the articles may provide for 60 hours, but the rule says, here I said the act overrides the articles of association. So here the answer is only B, because the articles are saying 60 hours, but the act says 48 hours. So this is only valid, even though articles otherwise provide. Any proxy deposited 48 hours before, that is valid. So this is not the correct answer. Not only if the chairman allows it, there is no such concept. So the proxy is valid because the act overrides the articles. Specifically for this reason, this is a peculiarity. The act overrides the articles in deposit of proxy. So this is the answer. Then, an explanatory statement must disclose the nature of concern or interest, financial or otherwise, of every director and manager only. Every director, manager and key managerial personnel, relatives of directors, managers, and key managerial personnel, both B and C. So, what should be the answer? Okay, good. Many are giving the correct answer. So, the first case, key managerial personnel is excluded. Here, every director, manager, and key managerial personnel, relatives of directors, managers, and key managerial personnel, both are correct. So you have this option both B and C. So this is only correct, right? So D is the correct answer as specified, because section 1 or 2 requires disclosure of interest of directors, key managerial personnel, and their relatives. They should also specify the nature of concern or interest. A member of Section 8 company can appoint. What are all the options? Any person, whether a member or not, as a proxy, only another member of the same company as a proxy, only a relative as a proxy, no one. Proxies are not allowed in Section 8 companies. See, one thing, you are fresh now, so you will be able to understand it and give the correct answer. For the exam also, you should have to give the correct answers. There, ensure it that you are giving it correctly. So, what should be the answer for this? As I could see, Sushmita, yes. See, for other companies, a proxy need not be a member. But for Section 8 company, a proxy should be a member, right? Read the okay. Many have given the correct answer. See, the rule says that for for a company, every company, generally a proxy can be a member or not. Proxy can be a member. The rule says proxy need not be a member. But for Section 8 company, the proxy should be a member. I said it is a charitable institution. So, Section 8 company can appoint only another member of the same company as a proxy. This holds good for ordinary companies, not for Section 8 company. This holds good for other than a Section 8 company, any person, whether a member or not. Only a relative need not be, there is no such rule. No one, proxies are not allowed. No, the Act doesn't specify like that. Proxies are allowed. But only a member can be a proxy. In case of Section 8 company. So the answer is B. Only another member of the same company can be a proxy of this company. So for those who have got the answer wrong, please verify why, what is the reason where you have gone wrong. So the act is clear that for Section 8 company, it is a member alone can be a proxy. Then, for which type of company is the abridged annual return? So that is the name given for MGT 7A. You need not go through an elaborate process. It is short. The annual return is very short. That you call it as an abridged annual return applicable. So MGT 7A. The other name for that is abridged annual return. So what will be your answer? See, for a listed company or for any other company, the proper annual return you should have to give it. That is in MGT 7, the very first topic which we learned. For this particular type of company, it could be in 7A or an abridged return. The very first topic in today's class which I dealt with was this concept. So many are giving the correct answers. See, for listed companies, it is every company should have to file the annual return in MGT 7. For other companies, it is MGT 7. For small companies and one-person company, why? What is the concept? Small company and one-person company, they need not be elaborate in it in giving the annual return because the number of shareholders is also less. For one-person company, it is probably one person running the show, right? That's why it is a one-person company. So for them, they need not give an elaborate thing. They can give an abridged return. So the management 7A is applicable for small and one-person companies. For listed companies, for other companies, the Act specifies. For other companies, it is only MGT 7. For small and one-person companies alone, it is 7A. That is an abridged annual return. They can also give a note, ask you to write a descriptive answer for write a note on abridged annual return. So it is applicable for small person and one person company. The annual return should be filed in form MGT 7A. For other companies, it is filed, a detailed return is filed in form MGT 7. That you should have to give it in the descriptive answer. Then, if a director or manager fails to disclose their interest in the explanatory statement, they shall be liable to compensate the company to the extent of the benefit received by them, a flat penalty of 50,000, double the amount of benefit received, that is the twice the amount of benefit received, no compensation, only a criminal fine. So what should be your answer? So I'm getting the answer, mixed answers. See, read it once again and see, you find this tricky MCQ? See, I get mixed answers. See, many have gone wrong. What is the reason? So it is a simple MCQ, but I get the answers mixed. Some are saying A, some are saying B. But which is the correct answer? See, if a director fails to disclose their interest in the explanatory statement. See, I will go to that slide explanatory statement. Effect of non-disclosure. It is liable to a penalty of 50,000 or 5 times the amount of benefit accruing to them, whichever is higher. But what is the question? The question asked is, if a manager, director, or manager fails to disclose their interest in the explanatory statement, they shall be liable to compensate the company to the extent of. See, you get a confusion between A and B. If a director or manager fails to disclose. If as a result of non-disclosure or insufficient disclosure in explanatory statement, any benefit accrues to a promoter director or other key managerial personnel or their relatives, such person shall hold such benefit in trust for the company, shall be liable to compensate the company to the extent of benefit received by him. And the second provision, the penalty for contravention of the provisions, it is not saying every promoter, director, manager, or other key managerial personnel of the company is liable to a penalty of 50,000 or 5 times the benefit accruing to him, whichever is higher. It is not saying a flat penalty of 50,000 rupees. He should have to compensate for the non disclosure, he should have to compensate the benefit received by him to the company. So here it is a bit tricky. You should have to read. Suppose it has given the penalty both or 5 times the amount of benefit accruing to him. I have included only the first option in that MCQ. So what should be the answer? Now still you stick on with your answer. See, the answer is A. The benefit received by him. Why the answer is not B? It is not a flat penalty. Suppose it is not a flat penalty. I have used the word flat penalty. This is wrong. It is 50,000 rupees or 5 times the benefit. See, let me write it here. See, it is 50,000 rupees or 5 times the benefit received, whichever is higher. So the wording says this is a penalty. See, this is a penalty. Now I have used the word liable to compensate the company. If I have used the word penalty, then you have to write, even still the answer is not complete. Flat penalty is not there. Now, one clue is that compensate the company. So what he has to compensate? He has to compensate only the benefit received by him. It is not a flat penalty. See, please read the question. Compensate the company. There are two issues. The first part to talk about compensation. for non-disclosure. So whatever benefit has been received, that should be compensated to the company. The second portion talks about the penalty provisions. So what is the penalty provisions? Second aspect talks about the penalty for non-disclosure. So it specifies 50,000 or 5 times the benefit received, whichever is higher. So penalty provisions is this. The question talks about only compensation. So the answer is only the benefit received by them. That is the answer. You should have to read the question. Fails to disclose, he is liable to compensate to the extent of benefit received by them. Right? Now, Mr. A holds 12% of the share capital, total share capital of a company. He appoints Mr. P as his proxy. Can Mr. P act as a proxy for any other member of the same company? See, this question could also be asked in a descriptive question, or it could be asked as an MCQ. This is both a descriptive and an MCQ question. So you should have to write it clearly if it is a descriptive question. So if it is a descriptive question, you should have to write the provisions correctly. Now you tell me for this MCQ. A very peculiar point. So what could be the answer for this? So many have given the answers. See, what is the rule which says if it is more than a person holds more than 10% of the share capital, then if he appoints a person as a proxy, that person can act as a proxy only for that particular member. Example, if Mr. A holds here in this case 12%, so that is more than 10% criteria, that limit. So he has fulfilled it. He has appointed Mr. P as a proxy. So Mr. P can act as a proxy only for Mr. A and not for any other person. So this is wrong because it is more than 10% is the criterion. This holds good for other companies. Suppose if the Mr. A's holding is lesser than 10%, then this will hold good. Now, for this case, he holds 12%, so this will not allow. This is not applicable. Articles, that is also not allowed. There is no such concept. He cannot act as a proxy for any other person other than P cannot act as a proxy for any person other than Mr. A. Now, how will you write if it is asked as a descriptive question? Mr. A holds 12% of the share capital. What are all the points that you should have to write? So the Act specifies more than 10% of the share capital. So in that case, he can appoint a proxy. That proxy can act as a proxy only for the member who has appointed him and not for anyone else. You have to mention this also. So 10%, more than 10% of the capital and not for anyone else. So you can give an example in the exam. Mr. A holds 15% of the share capital, he appoints Mr. P as the proxy. P can act as a proxy only for A. That only for A, you should have to make a mention. So you should have to make known that you have read and understood the provisions correct. That is how you should have to write the descriptive answers. So person acting as a proxy for a member holding more than 10% share capital cannot act for someone else. That is the explanation. Then a proxy is entitled to speak at the meeting and vote on a show of hands, vote only on a poll and is not entitled to speak, be counted for the purpose of quorum, vote on a show of hands but cannot speak. So it is if you have read the provisions correctly, yes, you can answer this well. So many are giving the correct answer. So that means you have understood the concept. Why the other answer? See, a proxy, I will give you the provisions, list the provisions first. See, a proxy cannot speak. See, proxy cannot speak. He cannot vote by, these are the restrictions, cannot vote on a show of hands. This is the provision. Can vote on a poll. His presence will not be counted for the purpose of quorum. Not be counted for the purpose of quorum. These are the provisions. So the proxy is entitled to speak at a meeting and vote on show of hands. Both are wrong. So A is wrong. Vote on a poll. Yes, he can vote on a poll. Not entitled to speak. Yes, this is correct. You should also ensure whether there is any other answer correct. So this is correct. Be counted for the purpose of quorum. No, he is not a member, so it will not be counted for the purpose of quorum. Then vote on a show of hands. He cannot speak. That is true. But this is false. Cannot vote on a, this is false. So it is wrong. Can vote only on a poll and is not entitled to speak. See, I said he cannot show his hands like that. That will not be counted. He cannot speak also. So this voting this is not allowed. He cannot speak also. But only exception is that he can be, and he is not counted for the purpose of quorum. Only for poll he can do it. Suppose one thing you should have to notice that a person has appointed a proxy. So the answer for this I will tell you. So it is only B. Because proxies have limited rights. They cannot speak or vote on a show of hands. See, the rule with proxy is that Mr. A has appointed Mr. P as the proxy. Now, both the Mr. A was able to attend the general meeting, AGM. He was able to attend. Then when he has attended, only he can vote at the meeting. Before the proxy is not entitled to vote. Suppose the proxy has voted on a poll, then he should have to keep quiet because already it is counted. He should not disturb the meeting. Then, even though Mr. A is present, he cannot vote because the proxy has already voted on a poll. Now, Mr. A has appointed a proxy, Mr. P as proxy. He can cancel it at any time. He can say if he is able to attend, he can cancel it and he himself can attend the meeting. So he can say, he can go to the meeting and say, I have lodged the proxy form with the company, but I myself am personally present. So I will go and I am entitled for that vote. That he can do it. See, this is only a provision if he is not able to. When he himself can come and vote, the company will allow him to vote. So that concept is also there, right? Then, in a public company having 5,500 members, as on the date of the meeting, the quorum shall be. So, you should have to be thorough with the provisions of the quorum for a private company. You should have to remember the provisions. Members personally present. So, what should be the answer? So, many are giving the correct answer. See, what is the rule for a private company? Two members personally present can be the proxy. For more than 1,000 members. So, I will go to that quorum. See, it says if it is more than 5, 15, 30, right? That you remember. So, for more than 5,000 members, 30 members. For more than 1,000 but up to 5,000 members, 15 members. Lesser than, not more than 1,000. So lesser than 1,000 it is 1,000 or lesser than 1,000, not more than 1,000. It is 1,000 also here because it starts with more than 1,000. So 1,001 to 5,000. That is the concept. If you want to be very specific, this is up to 1,000. Not more than 1,000 means up to 1,000. Then this will be 1,001 to 5,000. This will be 5,001 and above. That is the concept. So our question is 5,500 members, more than 5,000. So it will be 30 members personally present will be the proxy, or it will be the, I'm sorry, quorum for that meeting. So it is more than 5,000. So here it is 5 members personally present, here it is 15 members, here it is 30 members. So our case scenarios talks about 5,500 members, so it is more than 5,500. So this will be, you can use it for up to 1,000 members. This 15 members is greater than 1,000 but lesser than or equal to 5,000. Then this is for more than 5,000. And this you don't have it. So the answer is 30 members personally present will be the quorum. With this, we will stop for today's session. If you have any doubts, you can ask me, or else we will conclude the session. So Hope you all were able to understand the concept. So we will stop for today's session, and we will meet with more interesting topics in the next two sessions. Yes, thank you everyone, and good day. Yes. See, the annual return will be certified. That certificate should also be attached with the annual return of the listed company. Annual return is something separate. The certificate should also be given as an attachment. Both are compulsory documents to be given to a company. Sushmita. Yes. Sridhar, what is that penalty 50,000? I'm not able to get it. See, the penalty is 50,000 or five times the benefit. Penalty, flat penalty is 50,000 is wrong in that MCQ. So it's not correct. It is 50,000 or five times the benefit receipt. Is that what you are referring to? Okay. So we will stop with this for today's class, and we'll meet in the next class with interesting topic.